Inflation took a backseat as tariffs and geopolitics sent markets lower. Markets tumbled more than 2% on Monday after the White House re-escalated trade war fears tied to rising tensions over Greenland. So what's going on? Well, the White House has sharpened its focus on Greenland, citing its strategic Arctic location as well as access to critical resources. But Greenland isn't interested, and neither is Denmark, which governs the territory and is a NATO ally. Other European NATO members have stepped in to back Denmark and Greenland as well, which is raising the geopolitical stakes. So why does the market care? Well, unlike Venezuela, which markets largely shrugged off, this situation directly pits the US versus the EU, its largest trading partner. The White House has escalated pressure by floating new tariffs starting around 10% and rising to 25% if Europe doesn't back off. And Europe isn't backing down. In response, the EU is pausing approval for the US trade agreement tied to last year's tariff negotiations. That combination, escalating geopolitical tension with NATO allies, and renewed tariff threats has markets scrambling to reprice the risk. Broad markets are lower coming out of the long weekend, but impacts could become more sector-specific if tensions persist. Export-heavy industries like autos and industrials could face pressure. Travel may feel the impact of rising uncertainty, and financials could feel it from higher rates as risk premiums increase. Looking ahead, attention turns to Europe this week. US officials are attending the Davos meetings, and markets will be watching closely for any signs that diplomacy can cool off the rhetoric. For now, tariffs and geopolitics are back in the driver's seat. We'll continue tracking market implications as this develops. Stay tuned.